pause and listen in to what is happening at the press
Good
conference.
morning.
RBI governor is talking there.
Namaskar. I guess I will not be off the mark if I say that the policy overall is on expected lines. So it demonstrates that I think the Reserve Bank, the market participants, the market players, and perhaps the media and analysts and all, every stakeholder, I think the thinking is at the moment well aligned so far as the monetary policy is concerned. But having said that, I just want to make 5 observations. First, inflation is moderating and the GDP growth is robust. Number 2, the Monetary Policy Committee remains focused on aligning inflation to the target on a durable basis. We derive satisfaction from the progress made under disinflation, but the task is not yet finished. Number 3, the financial sector continues to be stable. Number 4, external sector also continues to be resilient. Number 5, as we move towards RBI at 100, the Reserve Bank will continue to focus on preserving financial stability and promoting a financial sector and a payment system that is robust, resilient, and future ready. Thank you.
Thank you, sir, for those opening remarks. I will, before inviting all of you, I'll request you to please restrict to 1 question per person, and if time permits, we will go for another one. I'll call out the names. I'll start with Mr. Ankur Mishra from ET Now.
Good afternoon, Governor. Thank you, Yogesh sir. My question is that you have mentioned that the elephant has reached, you want elephant to stay in forest in a durable basis. Is it still outside the room or has already reached forest? Why I'm asking, because in your projections you have said that in Q3 and Q4 there is going to be slight uptick in inflation. So what is your assessment?
You see, the elephant moves at a slow pace. So therefore, the last mile of disinflation is always challenging and sticky. And as I have very clearly stated, we would like inflation to align with the target on a durable basis. So that is the, that is what we are looking for.
Thank you.
Thank you, sir. I'll move on to Mr. Mayur Shetty from the Times of India.
Governor, in your speech, you specifically mentioned the need to build up foreign exchange reserves. So, this is something that RBI has been doing, and the rupee has been stable. So, is it that the currency stability has moved up in the list of priorities for RBI?
No, it has always been the priority of the Reserve Bank to ensure stability of the Indian rupee. And I have myself stated about it on a number of occasions. My colleagues have also talked about it on a number of occasions. So far as building up of reserves is concerned, I think consciously we have, over the last 4-5 years, we have been building up reserves whenever, as the market moves, depending on the prevailing market situation. So, and that endeavor continues, because it acts as a buffer against future risks, especially in situation when the cycle turns and if there are significant outward flows of dollars. So I have said it earlier also, so it is by way of a buffer that we are building up reserves. It adds, and this is very important, this whole approach adds to the strength of the national balance sheet.
Thank you, sir. I'll move on to Mr. Anup Roy from Bloomberg.
Thank you, sir. Sir, just trying to understand a little bit about your thinking on the heatwave warnings. You have not changed your inflation forecast that much, but will you be watching out for the heatwave warnings first, and what is the impact that's going to be before taking a call? or you have seen and decided that it is not that materially important?
No, there is a statement coming out from the IMD that the temperatures, I have not said heat wave, I have said the, high temperatures. The IMD has stated that there will be high temperatures, and perhaps they have used a different word, not use the word heat wave, but the temperatures are going to be above normal in the months of April, May and June. So we have to really watch what impact it has on, especially on food crops, and in that I have mentioned specifically about certain key vegetables. Now, so far as wheat crop is concerned, our information is that by and large the harvesting is over. In central part of India, it's fully over, excepting maybe a few areas, and even in other places also. By and large, the wheat harvest is over. So therefore, the wheat crop, availability will not be affected as much as it did, some 2 years ago when there were heat wave conditions starting March. So therefore, wheat, there is not so much worry, but there is not so much concern. But vegetable prices have to be watched, and any other impact that heat wave conditions that may produce.
Thank you, sir. I'll move on to Ms. Ritu Singh from CNBC TV18.
Governor, just a comment on, thank you for the question. On the exchange traded currency derivative rules, it's very clear that RBI stance has not changed. Yet the market, of course, has grown to almost $5 billion of notional turnover on a daily basis. Now that this deadline has been extended, but still the fact remains that you're asking for the underlying to be there when these trades are undertaken. We just wanted to understand, was there a concern that RBI had about, risks when it comes to the financial stability or the currency, because of which this deadline was put in the first place for a rule that has stayed in place for now 10 years?
Okay. I guess there could be some more questions on this issue. If there are any, you could just mention so that we take it all together and give a common reply. I mean, if she has already mentioned certain points, other than that, but related to this matter,
Exactly.
if you have any question, you can just put it so that we take it all together.
The question is that yesterday you extended the deadline after 5:30, after the trading hours. The market has died by that time. But you will have extended the deadline. What is the reason for extending the deadline by 1 month? Is there a scope to review your decision? That is the question.
Okay. Yeah.
So the
But
volumes
please
are-
remember that you are exhausting your opportunity to ask a
Sir,
question.
no, you said you're taking all these together.
Please keep that in mind.
So, no, just wanted to understand.
Unless you are asking something fundamentally different.
No,
I wouldn't-
are you okay with the volumes completely dying down in this market? And globally, the underlying is not a requirement in most markets. So why is that rule being made, especially for India, and why have we had that position for the last so many years?
Okay, I think I take it that these are the questions. So may I request DG Michael Patra to reply to that question, and I will, if necessary, I will supplement.
Thank you.
Just speak to the mic.
Yeah. So let me just quickly review the whole thing so that everything is in perspective. Please also read our press release of yesterday. We typically issue after market hours, so it is in keeping with RBI's style. The RBI's policy on foreign exchange risk management has remained consistent over the last few years, and there is no change in the policy approach. That is what I want to emphasize at the outset. So in 2008, when exchange-traded currency derivatives were introduced for the first time, they were introduced under the aegis of the Foreign Exchange Management Act, and the regulations of FEMA clearly stated that ETCDs are for hedging only. And when you state that, it implies that you must have an underlying exposure. In 2014, the RBI, to promote the ease of doing business, provided a relaxation in the sense that while you must have underlying exposure, up to 10 million of that exposure, you need not produce documentary evidence of it. Since then, over the next few years, that limit was raised to 100 million just to provide an incentive for market turnover and to expand the size of the market. The moot point is that it is only for hedging and underlying exposure is a mandatory requirement. The January 5, 2024 circular was in pursuance of a commitment made in the monetary policy statement of December 2023, in which we said that there are all these stipulations all over the place. We will bring it together into a master direction. And the January 2024 circular was a master direction. It just reiterated what has been there since 2014. So there was no change in that. Now, some market participants have been misusing this to understand that a relaxation in documentary evidence is tantamount to no underlying, which is not the case. And that is a violation of the law. I don't know what's right.
No, just I want to supplement by, summarizing what the Deputy Governor said, is that there is no change pursuant to yesterday's circular or even earlier. There has been no change in RBI's policy. This policy of this need to have an underlying has always been a part of RBI's policy for last so many years. So there was no change. And this is something which every market player knew. You cannot say that, this is something new. If you read the circulars, past circulars very carefully, it has been always there. So therefore, if somebody says it is new, it is not correct. I would like them to refer to the circulars. In fact, that is the purpose for which we issued the circular yesterday. Just to, because there was some kind of a narrative was building up in certain quarters, we wanted to make it very clear that there is nothing new. This has been the requirement all along. Market players knew about it. It is a part of FEMA regulation, the need for an underlying. And all that we have done is to sort of issue this circular, and there was also a question, or maybe there is a possible question, what was the need for extension? Let me preempt that and say that we received feedback and requests from several market participants that need more time. The earlier circular was issued in, the master direction was issued in January. And let me also say why the master direction was issued. In the December monetary policy, statement, the regulatory and the developmental part of the monetary policy statement, we had very clearly said that a comprehensive master direction would be issued, and the master direction was issued in January, first week of January, and it was said there very clearly, it takes effect from 5th of April. So everything was crystal clear. But because of requests which we have received, and because of the kind of narrative which was being built up as if it's something new, what we did is to just reiterate the earlier position and say that it is nothing new. It has been always there. And number two, because of requests which we received from several market players that they need more time, we extended the time for the implementation of that January circular. So instead of April 5th, we have now made it 3rd of May. No, this has been a consistent position. It's a legal requirement under as per FEMA regulations. So where is the question of a review of that? It's been there for last so many years.
Thank you, sir. Thank you, sirs. I'll move on to Mr. Laltendu Mishra.
Good afternoon, Governor. What is fueling the food prices inflation, and whether it is a new normal? And second question is, in an election year, what are the factors the RBI is watching out for?
We have given our projections for inflation and growth for 24-25 up to the fourth quarter of the year. Inflation, we have said it will be 4.5% for the whole year. Growth, we have said it will be 7% for the whole year. And when 7% growth happens for the current year, it will be the fourth successive year of 7% or higher growth. Beyond that, on elections, I would not necessarily like to say anything. And with regard to food inflation, I think let Dr. Michael Patra reply to that.
So food inflation has been highly volatile. In fact, in February it was 7.8%. And the indications are that in view of adverse climate events recurring, it will remain high. The actors keep shifting. At some stage it was cereals, then went to vegetables, and currently it is the proteins, eggs, meat and fish, while there is still some firmness in rice prices. So these are short duration spikes, but since they occur in multiple occasions, they give a persistent character. So what we are worried about is that there should not be any spillovers to the rest of CPI. So we watch very closely.
And before we go to the next question, I mentioned about this above normal temperature. I have the IMD release with me. It says that during 2024 hot weather season, it talks about hot weather season, April to June, above normal maximum temperatures are likely over most parts of the country. So it talks about hot weather season, it talks about above normal maximum temperatures.
If you like this video, then like, share and subscribe to ET Now.